Hi, everybody. I am Chan Fiechter. I'm a professor in the Department of Agricultural Economics, and I'm going to kind of tee up my co-host here because I want him to introduce our guest for this podcast.
Yeah, thank you, Chad. Todd Kuethe. I'm also a professor here in the department. We both work in CCA. And so we have all these interesting conversations where we try to learn about the ag economy. This is a conversation with Nate Kauffman at the Kansas City Fed. We wanted to learn kind of more about what he does, what the role of the Federal Reserve is, particularly as it relates to the agricultural sector. So Nate is a really interesting guest to have on because he's a branch executive for the Omaha branch, and he's got a bunch of titles, like all the people at the Fed do. So he's like some sort of vice president. They always have adjectives on it. I'm going to mess it up and have to look it up. Should have looked this up ahead of time, but that's how the show is.
Vice president of podcasts at Purdue.
Yes, that's how we work. And so, but he basically runs their ag and rural area programs. So focus on Nebraska because he's in the Omaha office, but also just that Kansas City Fed district in general, right? Which is the western half of Missouri because it's split between the Kansas City district and the St. Louis district, the only state with two, Missouri, my home state. And then I believe all of Kansas, all of Colorado, all of Oklahoma, a little bit of New Mexico, the northern portion there, all of Nebraska, and all of Wyoming. That's the other one, right? So that's kind of his district, but they also interact with the other feds related to anything kind of touches ag in their areas. So Nate was coming through town, just happened to be coming through for something else and wanted to come by and visit us. Known Nate for a long time. So the Kansas City Fed hosts an annual conference that's called the National Ag Credit Committee. So that's bankers, farm credit. They've got some of the mortgage lenders, people that lend to agriculture get together and they have kind of a professional meeting. They get lender reports and updates, and they'll bring in people from around the area that work in the ag sector to give presentations. And so that's always nice. But then there's also the academic half of it. So a group of us that are professors that kind of work in ag finance, we have our own meetings. We meet jointly with them for one day. So Nate has run that for a long time. Actually, I first met Nate when he was a grad student at that conference presenting before he worked at the Fed.
Oh, what?
Then also when I first got to Purdue, they had one of their employees was going to do a part-time appointment at the Board of Governors, another part of the Federal Reserve. So they had a need for somebody to help fill in a little bit. I applied and Nate was kind enough to hire me to do that. And Purdue was kind enough to let me use a day a week or so to do research and interact with the Fed. Now I have a PhD student who's doing an internship this summer with Nate. So Nate and I work together in a lot of different ways. So that's how I know Nate. But he's absolutely fascinating, interesting experience. I think it's one of those things that's like not really understood or appreciated by a lot of people in the ag sector. They're not aware that there's kind of a group at the Federal Reserve that are interested in the ag economy. Nate, why don't you introduce yourself?
Yeah, it's great to be here, Todd. So Nate Kauffman, I serve as the Omaha Branch Executive with the Federal Reserve Bank of Kansas City.
So we're going to unpack a little bit there. We're going to pretend our listeners don't understand anything, right? Often as teachers, we start with the basics, right? I use the analogy a lot of times, like I played football in high school, and every year, the first practice, we just wore helmets, right? Like you got to work your way up. So the Federal Reserve, there's a number of Federal Reserve banks around the United States. There's a network of them. How many?
There are 12 regional reserve banks, is what we call them, of which Kansas City would be one.
Oh, perfect. So then the other ones are like New York, Boston, Chicago, right? That we sort of hear about in the news. And then do all of those have regional branches as well?
Not all of them. So backing up just a step, the Federal Reserve is what we often would say the central bank of the United States, but where it's maybe not all that well understood is that it's not just one entity, it's not just one bank. So there are the 12 regional reserve banks together with the Board of Governors, and that is what we call the Fed, or the Federal Reserve System, which is the central bank for the United States. Depending on the regions that those regional reserve banks might be located in would determine, and historically where there may have been some cash operations, whether or not they would have branch offices. We happen to have 3. The Federal Reserve Bank of Atlanta happens to have 5. The Boston Fed does not have any. So it just depends on which region they represent and historically what those regions would have been responsible for.
So you have a team of folks for the Kansas City Fed that are based in Omaha, and you kind of run the Omaha operations.
Yeah,
is one of the
and
things.
the Omaha branch, we often would say, would have responsibility for representing the state of Nebraska. And we can get in more into what that means, but ultimately we would then have responsibility for the state of Nebraska from the Omaha branch.
Perfect.
So the board of governors, though, you don't necessarily consider that part of one of the branches. That's a standalone.
The board of governors would be one of the entities that comprises the Federal Reserve
Okay.
System, and the regional reserve banks would be the other entity, even though there are 12 regional reserve
Got it.
banks. So it's the combination of the board of governors, that is a government agency, together with the regional reserve banks that are not government agencies, that forms this complicated part public, part private institution known as
I
the
didn't
Fed.
I didn't realize
Yeah, I
that the
didn't
board of
either.
governors was actually part of the federal government. Okay.
The
Interesting.
board of governors, and one of the reasons for that, just to get into the structure a little bit, there are 7 individuals in Washington, D.C. that we call governors that are part of this institution that we're referring to as the board of governors. And those 7 individuals would all be presidential appointments confirmed by the Senate. They would be part of the group that is known as the FOMC, or the Federal Open Market Committee, that decides on interest rates. That's one of the primary areas of the Fed. And then the presidents of the regional reserve banks would also be part of that committee. Those presidents are not appointed by the President of the United States. They don't go through a confirmation process. So that's part of what determines this part public, part private structure.
So the president of the Kansas City Fed then is chosen or appointed by some apparatus within that region, right?
They would be appointed by a board of directors. So our Kansas City Fed has a board of directors that is responsible for providing governance and oversight to the Kansas City Fed. And we also have boards of directors in each of our branch offices. So I would be responsible for working with our board in Omaha. That Kansas City board of directors would select and ultimately present someone who would take on that position as president. It gets a little more complicated. It's only 6 of the 9 because bankers don't participate in that. But it would be the responsibility of the boards to appoint those presidents, unlike what would happen in DC, where they would be presidential appointments.
And those appointments, if let me know if I'm mischaracterizing this, that it also sort of each of the regional banks presidents often sort of represent kind of the industry or interests of that area, right? So if you think about like Dallas, that they would represent sort of the economic entities around Dallas, where Kansas City would represent sort of the economic entities around Kansas.
And that's actually one of the most important features of the structure of the Fed when it comes to monetary policy, which that sounds like a technical term. It really means discussion about interest rates. When the Fed was created, so you have to go back to 1913 to get to the structure of the Fed, the idea was that you would have input coming from different areas of the country. There was skepticism at the time about concentration of power in New York or DC or other places. And the idea was that you would have views that would be represented from regions across the country. So in the case of the Kansas City Fed, we would be looking to represent our region that's informed by context and analysis and other things that comes from that region that would then collectively be part of that monetary policy process.
It's weird to think that we used to be skeptical of decisions being made elsewhere, and as a country, like we've really moved past that, which is that's why we like to study history here.
Yeah,
right.
right.
No, so the setting of monetary policy then is set by this Federal Open Market Committee, which is the board of governors. So those are the ones that are appointed, and then the presidents of their regions that are selected by their own board of directors that are influenced by what's happening, right? And they do that multiple times a year, right? So what kind of role does an economist like you play in that process?
So my primary role would be to ensure that the areas where I have some expertise would be included in those discussions, and ultimately views being represented from either that industry or that segment region of the economy, knowing that you would ultimately want a national discussion to be incorporating views from any industry or any region. So it would be making sure that I'm including views from Nebraska as part of it out of the Omaha branch. But then because of my background and the other area of responsibility, and we'll talk about this as we go, is representing agriculture. So making sure that we understand developments in agriculture and rural parts of the country, because those may not always be represented if you're thinking about ultimately what drives employment and economic activity at a national level. Of course, you're going to think about large urban centers and industries that have an outsized role. But of course, ag would be part of what needs to be included in that. So my role would be to ensure that through ongoing research and industry connections and other things that we are maintaining a pulse on agriculture in rural America.
Well, so the other one, maybe we should take a little step back. So we always ask, as our regular listeners know, so we're sort of thinking about kind of like how an economist builds a model of the economy for that, right? So we think about things of like constrained optimization, things that you're trying to do and then activities that you do, right? So the Fed in general is trying to keep prices stable and then keep the economy chugging along and doing well so that we're close to full employment, right? And kind of loosely defined, right? And then where they do that is through where they can interact there most directly is setting monetary policy, right? And so you're looking at things like, if the Fed is going to make a policy change, they're going to raise or lower rates, then how is that going to affect prices and employment, but also things like investing or whatever within your space of jurisdiction, right? So you're talking about here's what's going to do Nebraska. Here's what we think the Nebraska companies would do,
and
or the ag
and it could go in either direction, right? You would want to know how those potential changes would pass through in terms of Nebraska's economy or agriculture. But likewise, you could imagine that there's some scenarios of some anecdotes or things that bubble up from a particular region of the country or an industry that actually inform some things that you would want to understand about bigger pictures that might be a discussion in the context of monetary policy. So it could potentially work in either direction. But ultimately, you would want, I think, a central bank that is responsible for making a decision that affects everybody in this country and all industries. You would want to know that those decisions are inclusive of the totality of ultimately what this economy represents.
Yeah, so like you specialize in Nebraska and in the agriculture sector jointly, right? But then you would have within the sort of Federal Reserve system, there will be people that look at energy or healthcare or light manufacturing or whatever, right? All this sort of different,
that's right.
different segments of the economy.
You would have somebody looking at healthcare or places where you could imagine that there are some large corporations concentrated in a particular industry. Then you would have contacts in those industries to make sure that those views are being represented. So the idea of having going back to the structure in the 12 banks and branch offices is that you would have people out in the country, in all parts of the country, to ensure that they are capturing those views.
So that kind of brings to the next natural question, which we always sort of ask about, like tasks, right? So when you're trying to assemble information that you need to be able to give advice to the decision makers, like what are the things that you're doing? Like who are you talking to? Or are you having conversations? Are you looking at data? Or what are you reading? Tell us about like sort of a typical day or week.
Todd has told me stories before of you stopping people on your lunch break to ask questions about how they're feeling about the economy. Are they construction workers? Like, can you like even share some stories about that too?
Yeah, I'll give an anecdote on that one because it was actually pretty interesting and I learned a lot during it. But to answer the question at a high level, I would say it's a combination of two things in terms of trying to provide information. One is we rely on data. And of course, we have economists and analysts that are collecting that data and trying to learn lessons from what that data says. So are there trends that are emerging in the data? Is there a new data point that seems to suggest something different is happening? Of course, we rely extensively on data and those that collect them.
And that's data that you're collecting either from the market or in surveys, but like the federal government collects data, state governments, and universities.
We would look at all sources of data.
Wherever it can
government data, universities, state level data, some of our own data that's primary, survey data, any of that would be included in how we think about data. So that would, of course, be important. The challenge, or one challenge with data, is that it might often be too old to really provide useful insights into policy discussions that need to be forward-looking. So perfect example is right now, we had some announcements of tariffs a week ago, but if we are looking at data that represents January and February of this year and trying to learn lessons about what that might mean for trade, it'd be really hard to make that connection. Yeah. So data can often be backward looking. The complement to that is we interact a lot with, we would say, industry participants, in an effort to learn how they're making decisions and what they're doing. So we would ask regular questions in meetings, roundtables, board meetings, and other things along the lines of, are you hiring? Why or why not? What sorts of factors are affecting those decisions? How are you thinking about changing wages? What sorts of investments are you making and why? How are the market fluctuations affecting the decisions you're making? Because ultimately, the decisions that they're making, if you think about that in a collective sense, eventually will show up in data. It might not be a perfect match, but we're at least going to learn some lessons based on what those conversations look like to them.
Well, and sometimes you can contrast that with what is showing up in the data, right? So if, if someone's going to hire a fair amount of like seasonal or part-time workers, those may not show up in like a quarterly data or whatever, but you would know like, well, there is this little tick up here or whatever, right? So,
and a lot of times what will happen is we will hear from contacts certain things that will be somewhat qualitative, but it will inform us as to where we might need to look a little bit more to try to get some better quantitative data to support that. So a lot of times it'll give us some signs of directionality. And then ultimately we want to better support that in other places to be able to provide an argument, so to speak, that suggests we understand that this is where the economy seems to be moving, either at a high level or ag or whatever it is. And then hopefully that informs good policy discussions.
yeah. You promised a fun
Yeah, I'll give
story,
you some-
and we want
Yeah, I know,
to circle back because we need some fun. We always need fun here.
So I happen to live in Omaha. That's where I live and work. And a couple of years ago, there has been for quite some time, Kellogg's plant that's not too far from where I live. It's one of a handful of Kellogg's plants, and they've gone through some changes. They've made some announcements, but they'd been in the midst of some labor negotiations for a long time. And a couple of years ago, there was a pretty well-known strike that was happening not too far from my house at this Kellogg's plant. And I thought, I can read a lot about what's happening with respect to this strike, but I'm just going to walk down there and talk to some people that are actually there leading the charge. And, you're going to get a certain picture that emerges from that, but it's interesting to hear those perspectives because there could be a variety of perspectives. One of them might be a corporate perspective that comes from some of the things that happen at a very high level, and some of them might be a worker's perspective, and they're trying to deal with very practical questions about when am I going to pick my kid up from school, or what does the next month look like for me when it comes to employment. So it was an interesting conversation that I had, just randomly introduced myself to a couple of the people that were in the midst of the strike and asked a bunch of questions. They never knew who I was with the Fed, and we never, of course, I never shared it elsewhere, but it helped me better understand what things look like on the ground.
Well, so ideally, I think that's, we're applied economists, right? All three of us, right? I think that's ideally what we always want to have happen. If I'm trying to understand like, something going on in a market, it'd be really nice to be able to call up somebody from the management side and say, what's going on from your perspective? And then talk to some workers, what's going on in your perspective? And then even talk to customers, like, do you even care about this, right? Or what do you know about it, right? So,
but it's hard, though. It's interesting because your job is to communicate as neutrally as possible. This is how this sector of the economy, instead of sort of like I think we interact sometimes with like lobby, where it's like they're advocating for. This is not advocation. This is, no, we're trying to describe the current and future challenges.
Yeah, so that's an important distinction. And going back to the structure of the Fed, we are an apolitical organization. We would say that we are independent, but within the government. We are ultimately accountable to Congress, the Federal Reserve would be. But when it comes to economic analysis, and to your point, trying to understand what things look like, our goal would be to try as objectively as we can to describe what conditions look like, and based on what the current structure of things might be in the economy or circumstances, how we might see things unfolding. That would be absent any kind of recommendation or advocating for any particular policy. So the way that I often describe this is our goal is to describe how things currently exist in the economy, but we would fall short of saying, therefore, policymakers should X. We don't make those recommendations. We ultimately describe how we see things evolving in the economy and then let others make the policy decisions around them.
So when you're briefing your own president right before the president would go to FOMC, But do you interact with any of the governors or other presidents from other districts as well? Because I would imagine there's also questions that would come up with agriculture across the country, right? And so,
Yeah, we are one system, so it's a Federal Reserve system, and I would have colleagues that work in other offices, and it is useful often to compare notes. Occasionally, we'll do joint meetings of various sorts because the lessons that you might learn from agriculture in the Southeast could be very different from the lessons that you learn in the Midwest or wherever you might be located. Some of them there could be some parallels. So yes, we interact pretty often with those other districts. We tend to know what sorts of things are informing their views. But the reality is that anyone who is part of that FOMC that we talked about earlier is bringing with them not just the support that they would have from their teams and the information that they get from their region, but their own lived experiences of how they see the economy evolving. So I think that there's ultimately part of the beauty of the way that it works, having the different voices, is knowing that you do have diverse thought that's contributing to things. And then ultimately, hopefully what emerges from that is a policy that is representative collectively of all parts of the country.
yeah, and as economists, I think economics sort of gets beat up a little bit in that, but we do also recognize those trade-offs, right? So that even if this is going to be good for the bulk of people or the bulk of sectors or something, there will be people that are also harmed by it, right? And so you're trying to just get that balance right and understand. We always say in like sort of textbook economics, like, you know, the winners should be able to compensate the losers in these sort of trades, right?
Yeah, and the Fed is, of course, when we talk about monetary policy and interest rates, we often say that it's a very blunt tool. It's not something that can be used with a great deal of precision to affect one industry but not another, or to affect one region or not another. It's a blunt instrument. And so for that reason, I think that you would want to know and ensure that all voices are being included when that relatively blunt tool is being used, so that there is a feeling that they're all part collectively of an economy that's inclusive.
So if I have another question.
You're doing great.
So I took my first economics class 25 years ago from right now. And I remember the professor telling us some kind of model of the economy and where recessions come from. And then the professor said, but now with Alan Greenspan, we've figured it out and this isn't going to happen again, right? Which is funny, this is 2000, right? So like, quickly after he was wrong, right? But I came in with this idea of being taught like, oh, the Fed just knows it all, right? And then like the sort of Fed skepticism sort of increased through recessions and stuff. So what has it, as somebody who works there in the years you've been there, what have you noticed sort of change about kind of people's understanding or view of kind of the Federal Reserve and the people that, when you're interacting with folks having these conversations, do you think they generally understand what you're doing or what you're trying to do?
I think most people don't understand the Federal Reserve at a very basic level. I think they understand the role of interest rates, and most people actually have a very intuitive understanding of that. If you're going to borrow money and you're going to take out a loan, you're going to pay some interest for that loan. They understand that there's a cost to money.
I always love when I have like non-traditional students in my classroom, because it's way easier to understand interest rates once you've bought a car, or it's way easier to understand contracts once you've signed your own rental agreement, right? Whereas like, you know, think about me when I was taking that economics class as like a moron 18-year-old kid.
What do interest rates have to do with it?
I had not interacted with the economy, right? Like I only understood the economy of like buying CDs, like compact discs, I should say.
The other part I think people understand intuitively is you alluded to this earlier. The Fed has what we often call a dual mandate. So that mandate has been given by Congress. It's to structure policy in a way to promote maximum employment. That's one side of the mandate, and price stability, inflation, is the other side of that. So I think people obviously have a pretty intuitive understanding of that. If you're looking for a job, you fit into that employment category. Or even if you're employed. If you interact in any sort of way with the economy and buying things, then of course inflation is something that you're thinking about. So I think people understand those very intuitively. They just don't always understand the calculus that the Fed applies to thinking about interest rates when it's taking into account that dual mandate. And so that's where just even the visit here, describing how we go about doing it, or how I would go about doing it, representing, you know, Omaha, Nebraska, Kansas City Fed, that's what that ultimately is intended to do.
Well, and I think too, the maybe it's just the corners of the internet that I get shoved onto my feed from time to time. But I think there's also a sort of view often of like sort of conspiratorial, like there's like this cabal of people that set the economic agenda for the world, right? But like that clearly can't be the case because you can't get all of these people to agree.
Yeah,
to
and I think
right?
we get I get a lot of those questions, a lot of those comments, and my observation is that those typically emerge when people just don't understand something, and it's natural to try to make connections with things that you maybe do understand or have heard from other places, but that is part of our mission, is to be a bit more transparent. So you asked what are some things that are different about the Fed? I would say relative to 25 years ago, I think the Fed tries a lot harder to be more transparent about how it's thinking and how it's structuring policy and the kinds of things that go into that. The chair of the Fed now does more press conferences than would have been done in the past. There's more information and forecasts that are derived from how the Fed thinks about things to try to suggest to markets, this is how we think about conditions right now. So I think that there's been a lot to try to ultimately communicate to the public and markets.
Well, I think there has been a much more, as a consumer of Fed information, much sort of clearer and plain speak description of here's what we're doing, here's what we're seeing, here's what we're thinking. Whereas like when I was first learning about economics, it was much more of like a policy that has been set will someday be reversed. And you're like, what does that mean? You know what I mean? Like, so
Yeah.
if I can jump back a step, so the other hat that we wear here at Purdue is at teachers. And so I get smart young folks all the time. Tell us a little bit about your background, how you came to work at the Fed, or like if I had a really smart student that I'm like, that person should work at the Fed someday, like what should they do with their time to get there?
Yeah. So my background and my path to the Fed was not a linear one. It wasn't straight. I actually graduated from college in 2000, 25 years ago, actually, similar to 2000, with a degree in chemistry, which doesn't sound like economics or the Federal Reserve. And what happened was after that, I got a job out of college. Prior to going to grad school, which was something I thought might be in my future, my wife and I made the decision to live overseas. And so we spent 3 years living in Southeast Europe, in Bosnia. And it was doing some voluntary service work with an organization that was trying to help people who would have fled the country come back to the country after the war.
Yeah, this had been right after the war.
And it was really that experience, that working with communities that were struggling with things that were really obvious in economic ways. I lived in a town at the time that was dramatically affected by the war, and the unofficial unemployment rate was 80%. Wow. So you saw on a regular basis people struggling with, life necessities. So I had gotten interested in economics, and at that time I made the decision that I was going to pursue eventually a graduate degree in economics. So started taking some classes, and actually, I don't know if you knew this, I took a couple classes here at Purdue before going to
I did not know.
Iowa State for my graduate degree.
This keeps our tradition of getting people that have been educated by Purdue to come in and talk.
So I was obviously not ready to go full on into an economics program, but I was very interested in the field. So I needed to take some background classes, and then ultimately pursued a graduate degree at Iowa State, finished the PhD program there.
We won't hold that against you.
That's fair.
They do a good job there too. Right?
In economics, was the department already joint ag econ and econ?
There was an option of both, but the path that I took was economics with a concentration in agriculture and finance. So having made that decision of the path that I wanted to take, the Federal Reserve was an option for someone who was interested in both the applied portion of research, but also the industry connections. So I will say that there's a parallel from the work that I was involved in Bosnia together now with the work that I do, which is when I lived overseas, I would spend a couple days each week just visiting with people in very rural places in Bosnia, asking quite simple questions about how they perceive their needs and their challenges. And then a few days of the week in office doing some other work to try to connect things at a more systemic level. I actually do a lot of the same thing now. I do some analysis in the office a few days a week, and I'm not talking always to people in very rural places, although I do that some.
Probably not as many Bosnians.
Not as many Bosnians, and I actually don't know that I've had any work-related conversations in Serbian in the time that I've been there. But
you should go to the St. Louis Fed. So St. Louis had a bunch. So when I was in college in St. Louis right after the war, and there was a bunch of Bosnians that relocated. So there's like phenomenal Bosnian food in
Same
St.
in
Louis.
Fort Wayne.
Oh, really?
Yeah.
Okay,
Must
we
have
can,
been
get you
something.
hooked
I'll
up.
have to go there.
If you want to dust it off, we know.
That'd be good. We can
We
do
can at
that
least
sometime.
go get some food, and you can talk to the
That sounds
servers.
good.
Yeah.
So now anyway, I'm doing some similar things, but it would be interacting with, sometimes it might be large businesses and sometimes it might be individual producers. It's a variety of things there to ultimately inform the way you understand how conditions are evolving.
Perfect.
Yeah.
So if a student wants to work, I'll say, go get a chemistry degree.
Yeah, go to
Then-
Bosnia.
Then go to, well, I don't think it should necessarily be Bosnia, just a place that's going under severe economic hardship.
That does
Yeah.
seem like a pretty natural path.
Yes,
What
that-
I would say is someone who has some natural curiosity about how the world works. Because if you're going to be at the Fed, understanding how things evolve is really important. But you need the technical background, and you all are involved in teaching classes and helping mentor graduate students that are going through that stuff, and they need to be able to do research in a rigorous way. But to be at the Fed where we're going to interact with industry groups that maybe don't care about the Greek letters that you're using in an equation on a model or something, you also need to be able to speak in very plain terms to understand and interact and then capture information there too. So you have to wear both hats. You have to be able to, I think, to interact at a pretty technical level, but then also in a very plain spoken way.
Well, I think that flow, I mean, this is my bias as a grad advisor, right? Is that flow goes both ways too, right? You want to make sure that those Greek letters are actually representing the things that the people are actually
Right.
Like if we're going to build a model to explain people's decisions, you better make sure you're accounting for and measuring those things that they actually care about, right? So it's a challenge, right?
Yeah, that's right. I think you would ultimately you want research that is being informed by what relevant questions might be and doing whatever the analysis requires to get to the answer, and then being able to describe that in a variety of settings at a number of different levels of complexity.
Do you consider yourself, this is going to be in the weeds, a microeconomist or a macroeconomist?
I don't know if I would label myself that way or not. I think my graduate training would have suggested that it was probably more micro, because ag tends to be an industry that is fairly applied, and
And we come from like a
tools-
farm management tradition,
That's right. And there's decisions that would happen within the industry that are probably more micro in nature. But the Fed as an institution, of course, is involved at a very macro level, which is to say that there's things that happen at a national level or an aggregate level or things that tie the two together. So I think before joining the Fed, I probably would have said more clearly that I'd be a microeconomist. But now part of my job is to connect the two things there. It's providing views from something that might be a micro level to something that's at a higher scale.
That's where I feel like the ag economy piece, I feel like it's harder to distinguish, right? For those of us who have interest in the ag economy, it's like you can't really pick out, well, we're just this or we're just this.
Yeah, and I think depending on what your role is or where you intersect with the ag economy, you may have different views of what constitutes macro or not.
Sure.
When I think of macroeconomics, just by way of being at the Fed, I tend to think about things like interest rates or trade or other things at a very national level. But somebody that's involved at a production level in agriculture might think of macro conditions as being something very different.
Mm-hmm.
Yeah, I think the other one, is like how much is macro just something that's out there coming down on us, right? Like sunshine
right.
or something, versus
Exogenous.
us adding up to it. Yeah, I was trying to avoid using the word exogenous.
Sorry, I did it.
No, we got smart listeners. We can use
yeah.
we can use words like endogenous and exogenous.
Exogenous meaning outside.
Yes, there we go. And so the other question that we asked, again, sort of thing about building models of, if we wanted to build a model for what you're doing with the Fed or what the Fed is doing. So we talked about your objectives, talked about your activities. What are your constraints? Like what sort of limits the Fed being able to do exactly what you'd like it to do?
I think one of the limitations is always data. If you're trying to develop thoughts and ultimately an argument that is supported by something that is data-based, then your main constraint is almost always the data or the information, let's call it information, that you're relying on to inform those views. And, in a perfect world, we would know all things at all times as to how conditions are evolving. So you could tell a very consistent and perfect story about what's happening with respect to the economy. But the reality is that you don't have that. So you have to rely on either imperfect data or impartial data, or in some cases, data that you don't have, and try to make connections from one place to another to help fill in the gaps of what you might be missing that's needed for that narrative.
Perfect.
Do you think, so I'm thinking about this, when you're trying to contextualize or brief the president before they go to FOMC, in a business sense, people would use those gut feelings to try to like preempt the market and do something sort of like to take advantage of something. Do you feel like when you're trying to characterize how the economy is going to evolve, is it these gut feelings to try to preempt, or is it, no, we think these signs are suggestive of where it's going, we don't need to preempt, like conservative versus sort of aggressive?
I think it's a little bit of both. And often what you'll hear us talk about is at the Fed is what we would say the balance of risks. So we would try to give our best assessment of how we see the economy unfolding. And that might be a current picture and also how we see things maybe in the next couple of months, understanding that there will be uncertainty in that. And we'll often talk about risks to the upside or risks to the downside of whatever that metric might be. It's not enough to just say, here's what we think is going to happen, because the next answer might be, well, why, and what's informing that view, and what else did you think about when you were making that argument? And then you have to be ready to be able to explain, well, here's the things that we included, but here's what we don't know yet, and here's what we're watching for. So I think it's a little bit of both of those things. Ultimately, you would want a policymaker to try to as best as they can understand how the economy is going to evolve going forward, so that when they're making their decisions or engaging in a policy discussion, it's as forward-looking as it can be.
So the other one, sort of related. So we're the Center of Commercial Agriculture, so we interact a lot with farmers. If one of our listeners is a farmer or someone else involved in the ag sector, and they want to get the best information they can to understand the Fed in a relatively neutral and informative way, where do you suggest they go?
I think every regional reserve bank would have resources that describe in pretty plain terms what the Fed tries to do. The Board of Governors would have it. We would have it available on our website. Honestly, though, part of it is just engaging with us at the Fed. We actually welcome a lot of those conversations, and we would have programs that we host at various times. So if there would be people that are interested in interacting, coming to one of those programs or having an opportunity to interact with someone, where I think you'd have maybe the ability to learn some of those things firsthand that's hard to absorb just by reading about or even talking here about the structure of the institution.
Well, and because they're not a profit-driven firm, Nate didn't also mention that they have so the Ag Finance Updates is what you call, where you have a bunch of data and information that you assemble on behalf of not just Kansas City Fed, but the system as a whole as it relates to agriculture. You guys give really great regular reports on what lenders are saying and what loans look like. And
so we want people to understand what is being included when we talk about economic conditions or agriculture or ag finance, whatever that topic might be. And the hope would be that by being involved in the conversation, sharing information, that we will come into contact also with people that will provide us information back. And by being engaged in the industry, that's, I think, the best way to develop the narrative of how you understand it. I don't think that you would be able to be removed from that and still be able to give a compelling picture of how it's evolving.
I don't really understand how you use the balance sheet at the Fed and why, like conceptually, I think I have some idea. Can you give any more indication of like, how do you use the balance sheet of the Fed? And maybe use the example of what we just did kind of through COVID and where we're coming out. Esther talked about that.
The former president of the Kansas City Fed was just here on campus to give a lecture to the department. And so we had a conversation to fill in our listener who might be listening to this in the future and not know whose name you're dropping here.
So the probably the easiest way or maybe the shortest way to explain it is for people going back to the years that followed the financial crisis and recession, because that's really when the balance sheet would have first been used as a tool, and it wasn't really used as in that way prior.
So we're
So
thinking
be-
like 2008,
2008 to
2010,
2000. Yeah. So
right,
following the
that
financial crisis in 08, 09, and what would have been referred to at the time that people would recognize the term of quantitative easing. And ultimately that means using the balance sheet, and I'll try to explain that quickly in a second, in an effort to try to provide stimulus to the economy after the traditional tool of short-term interest rates would have already been used, and that interest rate would have been pushed to zero, but the economy was still struggling. So the balance sheet would be simply a way of saying that the Fed is going to acquire assets, it's going to buy things, ultimately by crediting banks and financial institutions with an account that allows them to make loans that filter into the rest of the economy and ultimately provide stimulus that way. So it's a function of a central bank that has the ability of creating money, but not necessarily hard currency by way of credit. So basically crediting the account of financial institutions that engage with the economy in every way with the economy that allows there to be more flow of credit and money available. So it's just an additional way of stimulating the economy, ultimately driving down longer term interest rates. So that would be probably the shortest way to explain it, is that the traditional tool of the Fed is to affect short term interest rates. And the balance sheet and the approach that would have been taken both during quantitative easing of 2010 and onward, as well as the COVID environment, would have been to try to affect longer term interest rates and stimulate additional activity through those actions.
Nate can tell me if my analogy works. What I've used before with like thinking about this, before I was at Purdue, I lived in another Midwestern college town, and there was a local realtor that was always trying to stimulate his ability to sell houses. So his tagline was, "Your house will sell in 90 days, or I'll buy it." And that was his way of sort of like, oh, well, if you guarantee that you want to get the house on the market, like he would be sort of that reserve purchaser, right? So it's like the idea of like, to stimulate the economy, sometimes just dumping a bunch of short run money isn't going to do anything, freeing up sort of the way that business think about the long run, right?
Gotcha.
Buying those
Okay.
buying those like longer term things, right? Like,
Yeah.
if you can't sell your house, we'll buy it, right?
It's sometimes confusing for people because it would be a function of a central bank that any other bank, any commercial bank would not be able to engage with. It's the Federal Reserve, just by nature of its priorities and mandate, being able to ultimately provide stimulus by way of credit through the creation of new money and allowing that to flow through the economy in ways that other banks wouldn't be able to do.
Sure. That makes sense.
So then maybe we'll pivot towards our end. So
Yeah.
I like to try to end things with a lightning round to give us a little bit of fun, and also if our listeners are starting to flag a little bit on their running on the treadmill or driving the car around. So the lightning round, you have to answer quickly because it's lightning. Okay, so first lightning round question: if you had a magic wand, you could only use it for work, to gather some piece of information that you don't have, what would you use your magic wand to learn?
I'd say it would be to always know who I need to reach out to and ask a question.
Oh,
That's really
a good
good.
one. I like
That's
that
really
one.
good.
I like that.
And you got the lightning round.
I know.
Yeah, that was good. Be quick.
He's here for
Yeah,
lightning.
I
Well,
know.
He's a Federal Reserve economist. He's got to respond
I know.
quickly.
Well, and I take your
to
point.
difficult
If-
questions.
If people are listening to this on a treadmill, it's got to be quick here.
Yeah. Well, and then the next part, if the Federal Reserve was able to issue you a company issued time machine, so you can only use it for work, you can't use this for recreation. When are you going with your time machine?
Oh, that's a hard one. I'm failing the lightning round on this one, Todd.
It's okay. It's okay.
I think because of the interest that I have in agriculture, I would want to understand what led up to the 1980s. I think we get that question all the time about agriculture in the 1980s, and I'm guessing that you have a lot of listeners that would have lived during that time. It would have predated the experience that I have. So I think learning some of that firsthand and how people were making decisions in advance of that, I think would be useful for.
Not to mention you get to drive like cool cars, like late 70s, early 80s
That's
cars
right.
around.
And the music, of course, we know is better.
Yeah, that would be great. I love that one. Okay, so I'll ask this one. This one is we get sometimes sad answers. So I'll come with another one in case Nate has a sad answer. The last time you had difficulty sleeping because you were thinking about something for work, what were you thinking about?
We host a couple of events through the year, and I know that you're familiar with some of these. And whenever you host an event that involves people coming from other places, you spend a lot of time trying to think about, are you designing this event in a way that's ultimately going to be of interest to the people that are coming? So when we're doing that, you have to take into account a lot of different things, a lot of different personalities, challenges coming from different parts of the country, perhaps. So probably the last time would have been laying awake thinking about, are we covering all of our bases on this? Is it something that, these people are going to want to come? Because to my earlier lightning round question, we want to be able to interact with them and ask them questions.
Yeah.
So there's a lot that goes into, I think, just making sure that we're presenting ourselves in a way that people understand what we're doing and then want to engage with us.
Well, it's similar to like planning a wedding twice a year, right?
Yeah.
Where it's like, how are we going to get all these people here at the right time? Make sure they're around the people they want to be around, right? Perfect. Well, then it wasn't a sad one.
Yeah, that was great. That was a great answer.
So I asked that to somebody one time. I always ask that question and then somebody would tell me about how they were worried they're going to lose their business and stuff. And I was like, oh, this is where it's good to know. It's good to know about that. But but you didn't answer bummer. So I think we can wrap it up there. So thank you for joining us. Thank you, Nate.
Yeah, it was a good discussion.
We learned a ton.
Yeah.
And for anyone listening to this podcast, tune in next time and we'll have another interesting conversation. Thanks again to Nate for coming in. Similarly, if you think we could learn from you and you happen to be coming through Purdue, let us know because we would love to learn more. Thanks for listening. Make sure to subscribe, tell your friends, tell your enemies, tell your loved ones, and come back next month and we'll have another conversation for you to enjoy.
Do people still have enemies?